Here we are again, back up over $1 plus and back up over 50. But even with the sharp correction we saw, silver is still up between 65 and 70% this year. And maybe it's because silver is now a critical mineral. When you see the resiliency, the strength, where it's right back up over $50 again, after everyone's saying it'll be another 10 years before it gets back. It's over, they said, when gold broke through 4,000 down to 3,900. It's over. No, it's not. When you have the chief investment officer of Morgan Stanley saying put 20% of your assets in gold, and when I say gold, I mean silver too. He didn't say that, but I'm saying it. When you see Michael Hartnett saying no, 25%, when you see Jeffrey Gundlach saying 25%, the bond king saying 25% isn't overweight, you see all these things happening at the highest level, talking to institutional traders. No, we're not. And silver will outpace people's expectations, and gold probably will get revalued. I do believe it will.
Gold and silver markets are regaining momentum after recent corrections, with silver surging back above $50 and gold holding strong near the $4,000 mark. Despite short-term volatility, both metals continue to demonstrate resilience, driven by growing institutional interest. Global uncertainty, inflation concerns, and supply limitations have once again positioned precious metals as crucial hedges, with analysts predicting further gains as major banks increase their gold and silver allocations. Andy Schectman, a respected voice in the precious metals industry, emphasizes that this renewed strength isn't a short-lived rebound, but part of a larger shift in global finance. As he points out, major investors and strategists, from Morgan Stanley to the bond king Jeffrey Gundlach, are advocating substantial gold exposure, underscoring the changing sentiment toward tangible assets. Now, we present the clips from Andy Schectman's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
It's important to remember that even with the sharp correction we saw, silver is still up between 65 and 70% this year. And I mean, I don't know how many assets rank higher than that. But when you have any asset that appreciates in a parabolic manner 40% in 2 months, a correction is inevitable. This is what overbought is. And, you know, it shouldn't come as a surprise to people. And I think that certainly is something that's hard to rationalize for us gold and silver bugs, because we've waited so long and feel that, you know, that the market should have done this a long time ago, gotten to these levels. But suffice it to say, this is a very high stakes game where some of the biggest institutions on the planet got caught very much offside and were, you know, actually looking at what could ultimately be a existential threat to their survival. And so they did an awful lot to slow down the rise. But here we are again, back up over $1 plus and back up over 50. And maybe it's because silver is now a critical mineral. We've been talking about that for a long time now. Now it's official. Maybe it's the realization that it's irreplaceable, that it's the most conductive element known to science, the lifeblood of energy and data and power itself. Who knows? But the bottom line is that with the U.S. government calling it a strategic mineral, they've put a floor under the price, and they will, I think, start to purchase it. At the same time, you have the Chinese Ministry of Commerce. Their name is, the acronym is MOFCOM, Chinese Ministry of Commerce, has issued new rules regarding the state-traded exports of a few different commodities, including silver. So they are doing the same thing. They aim to step up, if you will, the protection of resources, and that means curtailing exports in 2026. And look, when you realize that the largest refiner of silver in the world, China, is restricting exports and has announced starting in 2026, all silver exports will require individual government licenses from Beijing. To me, this move classifies silver as a resource of national interest, not just to the United States, but signaling a strategic shift towards state-managed supply, including places like China. It's a big deal. It's a very, very big deal. And I think the bottom line is silver is being redefined from an industrial metal into a geopolitical resource, or into a strategic element, not just in the United States, but all over the place. And then you look at the essential role of silver in solar panels, electric vehicles, semiconductors, defense, you name it. I think what it really does is it shows that both countries are viewing silver as a strategic asset. It's not a commodity anymore. And, I think you're looking at a potential supply crisis and rising strategic value in a market like silver that is so massively rehypothecated at the upper levels, meaning the same contract is sold over and over and over and over again, creating a real problem. Remember, the market cap of silver is the size of a pinhead, and you throw a bunch of money at it, and it doesn't just go up, it explodes higher. This is what they've been trying to hold back. And I think that the big money across the globe understands this. I think they understand that this is a rush to a quiet rush to accumulate the resources. And I think they know that that if they don't do this, they being all of the governments, and really work hard at protecting their own supply chains and their own strategic stockpiles, silver is a necessary element. It's necessary in moving energy. It's necessary in moving civilizations. As dramatic as that sounds, there is no element on the planet that conducts heat and electricity better than silver. People say copper. Copper's too slow. Copper's going up too. It's reclassified. But silver is a needed element. It is critical. And I think it will start to affect the supply chain. I think people take for granted for far too long how easy it is to get silver. I talk to people all around the world who have a next to impossible time of getting it all around the world. I get emails every day saying it's impossible to find silver. So it's been something we've taken for granted here in the U.S. I could see that rapidly changing if all of the governments start to say, hey, we better get into a protectionism type of mode and not sell this to the United States and to North America. Let's take care of our own first. And you could argue that's what the U.S. is doing right now. Right. I mean, over time, you can't suppress it. I think over time, the direction the market is moving will win. Throughout that greater trend, there are moments of suppression. These are some very big entities that have a lot of firepower. But no, I think long-term, the trend is moving in a direction that you won't be able to suppress it. And I think we're setting up for a battle between the industrials, which would be the Teslas and the Sonys and the Samsungs, the hedge funds, the investors, but now you can add into it the government. And, bald guy money was talking about, and he says, look, the U.S. government just for military alone will need between 50 and 100 million ounces. And I think that's on the low end. So you put into it the government putting a floor into it, the government now going after it, governments going after it, restricting supply, restricting exports. And at some point, you add the government into the mix. You have a three-headed monster all battling for the same ounce of silver: the industrials, the hedge funds, investors, and now the governments. And I think it will make it nearly impossible to hold the price down over a long period of time. I think that you can only manipulate a market over a period of time by pushing in the direction that it is going. And it was easy to hold down gold and silver for all these years in a world where the dollar was revered and our policies and our currency and our institutions were trusted. Are any of those things true anymore? Maybe not. And if so, you're seeing a slow motion rush, not too fast to cut off the nose to spite the face. Everyone said, why don't they just drain the LBMA? Because it would be over like that. Instead, you bleed it by 1 million paper cuts. And at some point, that becomes the patient starts bleeding out from all the paper cuts. Then everyone rushes. How far we are from that, I don't know. But I would say that to be on the wrong side of this trade right now, when you see the resiliency, the strength, where it's right back up over $50 again, after everyone's saying it'll be another 10 years before it gets back. It's over, they said, when gold broke through 4,000 down to 3,900. It's over. No, it's not. When you have the chief investment officer of Morgan Stanley saying put 20% of your assets in gold, and when I say gold, I mean silver too. He didn't say that, but I'm saying it. When you see Michael Hartnett saying no, 25%, when you see Jeffrey Gundlach saying 25%, the bond king saying 25% isn't overweight. You see all these things happening at the highest level, talking to institutional traders. No, we're not. And silver will outpace people's expectations, and gold probably will get revalued. I do believe it will. And silver will come along for the ride. To what degree? Don't know. But even if silver was gold was marked to market on the balance sheet at 4,000, 4,100 bucks. Well, let's take 4,100 and divide it by $42. That's pretty easy math wise. It should be right around $100. But 4,100 divided by 42 is 98 bucks. 42 is pretty much the average gold silver ratio of the past 100 years. So silver could easily double. And it's funny if you look at the way cup and handle formations are measured. You take the top of the cup with 1980, and silver's in a 45-year cup and handle. Everyone talks about that. And breaking through 50, you're breaking through the cup. You're breaking through that resistance level, the big cup, and then the handle. It's like a double cup and handle almost. But that, if you take the way you measure that in technical analysis, you take the top of the cup and the bottom of the cup. The top in 1980, the bottom in the early 90s, $4, $50. The difference, $46. You add it to the top when it breaks through, that puts it at $96. That's 42 to 1 right now, which has been roughly the 200-year average since the Industrial Revolution. So Keith Neumeier wasn't wrong. He's just early. And I would say that silver will follow. To what degree remains to be seen, but $100 silver is not stupid. It is not out of line. And if you realize it's really coming out of the ground at 7 to 1, that's the geologic ratio. He said it again today in an interview I listened to. I was listening to interview him today. And you take 4,000 right now and divide it by 7. Silver should be 570 bucks right now, based upon the geologic ratio. So these numbers that seem absurd really aren't from a logical perspective. You can be your own bank by holding gold and silver. And this is, people don't quite get it because they look at the dollar index and see it's only down 9% or whatever against a basket of other crappy currencies, but measured against silver, it's down 70% this year. Gold, even with the pullback, gold, almost 60%, even with the pullback. We're right back to where we were. But the point of it is that you measure it against gold. James Rickards measures the dollar index, measures the dollar's value since 1971 when we closed the gold window. It's $96,000 if measured in that way. But if you measure anything you buy in gold or silver over the last several years, prices are going down. They're not going higher. You look at gold, which is quadrupled, and silver even more. The S&P 500 this year, and this is in the face of the greatest tech boom ever. So, yeah, I think that I think those are all valid points, and you own gold and silver not to become wealthy, as I always say, but because it is wealth that will protect you from a dollar debasement. And it's funny, you have mainstream media talking about dollar debasement. They call it the debasement trade. This is where they're going. And I think they realize that in order to have any hope of growing our way out of this problem whatsoever, it starts with debasing the dollar. You do that by letting gold and silver go much higher.
As the global financial landscape continues to shift, one thing remains certain: gold and silver are reclaiming their historic roles as the anchors of real wealth. With central banks quietly accumulating reserves and investors around the world recognizing the limits of fiat systems, the movement toward tangible assets is no longer a fringe concept. It's a financial awakening. The growing consensus among experts suggests we are standing at the edge of a generational reset, where those who understand the power of hard money may find themselves ahead of the curve. That's why it's more important than ever to stay informed and think independently. Markets can move fast, narratives can change overnight, but the fundamentals of value never lie. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.